Hello there, many thanks for joining us in our Thursday Business News Report. We now start off with reports from the Federation Account Allocation Committee, which says it has shared a total sum of 725.57 billion naira in March this year, according to the Federation Account Revenue to the allocation of the federal government, states and local government councils. Now, the committee in a communique issued at the end of a virtual meeting of the Federation Account Allocation Committee for the month of April disclosed that 725.57 billion naira total distributable revenue comprised distributable statutory revenue of 521.16 billion naira and distributable value-added tax revenue of 204.402 billion naira. Now, in March this year, the total deduction for the cost of collection was 44.41 billion naira, and the total deduction for statutory transfers, refunds, and savings was 382.82 billion naira. Now, from the total distributable revenue of 725.57 billion naira, the federal government received 277.1 billion naira. State governments, on the other hand, also got 227.2 billion naira, while local government councils received 167.91 billion naira. A total of 53.35 billion naira was shared to the relevant states as 13% derivation revenue, and the committee also disclosed that in the month of March this year, petroleum profit tax, oil and gas royalties, import and excise duties, companies' income tax, and value-added tax all recorded tremendous increases. And the banking sector now, 10 deposit money banks in Nigeria earned a total of 1.57 trillion naira in net interest income last year, up from the 1.49 trillion naira as of December the 31st, 2020. That's according to reports from the Central Bank of Nigeria. Now, according to the Apex Bank, data from their audited financial statements for the period ended December the 31st, 2021 shows that 7 of the banks boosted their net interest income, their main source of revenue, while the rest witnessed a decline. The 10 banks are Union Bank PLC, Stanbic IBTC, Fidelity Bank PLC, Sterling Bank, Wema Bank, First City Monument Bank, Access Bank PLC, Guaranteed Trust Bank, United Bank for Africa, and Zenith Bank PLC. Now, net interest income is the difference between the revenue generated by a bank from the interest earned on assets such as loans to customers and the interest paid out on customers' deposits. And away from that report, Nigeria's manufacturing sector can contribute more to the national gross domestic product if an enabling environment is created to drive its growth. Participants shared the view at this year's Equipment in Manufacturing West Africa Conference in Lagos, and TVC News correspondent Ifeanyi Eze reports.
The focus of discussions at the conference center on the theme, Rethinking Manufacturing and Value Chains for Inclusion and Sustainability. Participants drawn from the public and private sector agree on the critical importance of the manufacturing sector in determining a country's economic development.
Manufacturing is critical, is a critical sector of any country and could be a significant contributor to the economy of that country if well developed.
Nigeria being the giant of Africa, we have our numbers over 200 million people. It means we have the will, we have the capacity, we have the skill set. But the enabling environment has to be there for foreign direct investment to come into place, for manufacturers to have the right finance.
Other speakers identified limiting factors impeding Nigeria's manufacturing sector, noting that there is need to change the narrative.
The ease of doing business in Nigeria is very poor, even though there has been focus and attention to improve it over the last several years. We have not been feeling that improvement. To clear our goods from the ports is arduous and difficult and challenging. We meet with all sorts of obstacles. Those are the challenges entrepreneurs face in our country.
Government authorities say a strategic roadmap is being implemented to tackle current hurdles.
The Federal Ministry of Industry, Trade and Investment has been facing the challenges ahead on. For about the first time in the history of the ministry, we have had a consistent set of industrial policy under the caption of Nigerian Industrial Revolution Plan.
We're all doing everything to ensure that we have power. Truth is, there's been a lot of challenges, and not only in the power sector. All sectors have had one challenge or the other. But yes, I agree that the driver is power. And I also agree that we have a lot of work to do in moving power to where all of us expect it to be. But I can assure you that this government is doing a lot.
The yearly conference provides a platform to showcase available business opportunities in Nigeria and how local and international collaborations can drive growth and development of the manufacturing sector. Ifunanya Eze, TVC News, Lagos.
Well, it's now time to bring you highlights of midweek trading transactions as the stock market continues to pull up positive figures following gains by companies. Ifingekup has the details.
Many companies have steadily improved their prices and values following positive trends recorded at the stock market. Flat transactions saw trade index at 0.01% as many fund managers preferred long stay at the sales windows. Market conditions threw up Academy Press and Wema Bank as top price gainers with almost 10%. Cadbury, UPDC and Presco also made reasonable gains. Ikeja Hotels and Livestock Feed were heavy business losers on the back of sales pressure by investors. Chip PLC, Union Bank and Cornerstone Insurance dropped in prices and values. 246 million units of shares were traded with value at 2.32 billion naira. Across Africa, stock exchanges traded in mixed territories. It was negative in Kenya, where the Nairobi Securities Exchange lost values by heavy margin above a percentage point. Stock traders moved for equity sales for cash. The market in South Africa closed in green. Many equities traders returned to the trading floor for deals. Finally, the market in Accra, Ghana traded flat. Stock prices were generally weak in trade sectors. Effiong Ekop, TVC News, Lagos.
And on the flip side, looking at activities and market transactions on Wednesday, most Asian stock indices fell as growing fears over the global economy drove investors to dump riskier assets in favor of havens such as the US dollar and government bonds. Now, financial markets are grappling with multiple risks, including the prospect for aggressive US interest rate hikes, a sharp slowdown in China, surging inflation, and a war in Ukraine. European markets were set to open following an Asian lower trading pattern, and in early trade yesterday, the pan-region Eurostock 50 futures slipped 0.38%, and London's futures also dropped to 0.12%. News that Russia had briefly cut gas supplies to Poland also deepened worries, sending MSCI's Products Index of Asia-Pacific shares outside Japan also down 0.76% to its lowest level since March the 15th. Now, Tokyo's Nikkei was also down by 1.4% in battered Chinese stocks bucked the trend, gaining 1.14% as sentiment got a short-term boost from data showing profits at industrial firms growing at a faster pace last month from a year earlier. And wrapping up business news now, oil prices on the international market extended some gains amid simmering geopolitical tensions as Russia cut gas supplies to Bulgaria and Poland, while hopes of China's economic stimulus buoyed the demand outlook. US West Texas Intermediate crude recorded a price increase of 0.65% to hit $102.40 per barrel. Brent crude also sells at about $105.80 per barrel, registering an upward price margin of 0.78%. Bunny Light's performance, however, is also waxing stronger with a price surge of 4.87% to sell at $104.60 per barrel. And for the OPEC basket, crude oil dealers offer $101.90 per barrel with a price dip of 5.32%.